Welcome to TradeTheNBA.com. This is John's Reporters for the 18th, and the broken record continues as we just continue right across extremely into the, excessive area now, over 25 on a shakeout level here means that we have officially achieved an overbought status. It can remain this way a little bit, but we're going to get a clear indication if we see a breakdown of the shakeout with the corresponding short signal. Now, while the orange is elevated, we're seeing that even at this point, shorts fading a little bit off of this slow, ever steady rise, and actually giving a green crossover for midterm buyers. So the fact that you've seen this beautiful elevation of the red DOC above the zero line means that you're in just a clean, easy path. There's no other way to describe it, especially with short-term buyers having been completely reset. Even the smallest catalyst is going to drive this, probably all the way over 75. So think about that. NQ, similar, a little bit lower, so it's got more room that it can even push. A little bit more congested for it on its DOC, and that suggests more consolidation at this particular point, but still a decent reading. Euro still outside the range as long as it's above the 115.5 range. It just going to continue to promote the futures to the higher, at least for S&P. Bonds, again, still a little bit artificially elevated, and I think there's just some uncertainty as to what's going to happen with Fed chair appointment and that. And plus, there are some people just are afraid of the market at this particular point and want some security. Now, if rates rise, or if that impression that rates are going to rise increases as we get towards December, then I think that that'll probably suffer a bit more of a hit. But we'll just have to go with what the chart tells us, and it was a nice retrace there. Oil still holding its elevations, beautiful with that cyan under red is always bullish setup. It might get a little weakness here if the steel crosses below the cyan at this particular point. I've already backfilled the positive extreme, which wasn't hard because we were finished towards the lows of that pop out anyway, but makes the ABMs very easy plays above and below. And gold, a little bit of a retrace. Not unlikely that it could have to come back and fill back in this dip below the red line. I'm not seeing a dramatic sell signal per se, but we didn't get the long-term buyers to cross over cyan to give a real strength indication. I think that's just the uncertainty about whether or not there will be any inflation or not. I think that it's already obvious that we're starting to see it for the first time in a long while, and I think that's only going to compound itself, particularly if the labor market tightens more and you actually see wage growth. So here I shrunk it on the 5K quite a bit. You can see this is a maybe 7-point range total for an entire days on end. You expanded a little bit when we had that little soft dip to fill some positive extremes, but that's impressively low volatility for an October. Interesting, as we will come up against the end of the month of October, which always brings out lots of stories and hyperbole, but at the end of the day, you have to go with the time that is, and while people think valuations are excessive, companies aren't contracting at this particular point, things are expanding, so you have to keep the perspective of where things are macro before starting to claim gloom and doom. And as I've said, pre-pricing inflation is going to make PE ratios seem high, which is why it's not necessarily an effective measuring tool as you're going into an expansion phase. But that's neither here nor there. We're just going to go with what the readings are. And for now, it's still a little bit of consolidation with upside bias. So that's the long and the short of it. Keep it simple. Trade well.